All right, well, if you're like most people, you're counting on all of those new rules that came out of the crises to protect you from shoddy lenders, but there is a new trend in bad lending, and those new laws designed to protect you don't even apply. We're here with everything you need to know to protect yourself. Fox 29 lifestyle lawyer and advocate Shari. Thank you so much for being here.
Good morning.
All right, good morning. Talk to us. What kinds of loans are we talking about
This is a major underlooked problem, Ashley. We're talking about car loans, subprime car loans. Because here's what happened. The folks that were making all that money, the gravy train that was the subprime mortgage crisis, well, when the new laws came out, put an end to that, they were looking for something else to do. And there's actually a carve-out in the new laws for car loans, so that the new laws don't apply to them. And the new regulator, the Consumer Financial Protection Bureau, doesn't regulate them. So we've seen an uptick of 150% in subprime car loans. About 1 in 4 of us are supposed to be impacted by this. Already we're seeing repossessions, car repossessions, up 80%. 500,000 people have lost cars so far this year because of subprime car loans.
No kidding. Well, talk to us about how these are similar to those subprime mortgages that everybody has been talking about.
Well, you'll remember that the new rules basically addressed 3 things. They addressed the types of mortgages we can get, the fees that can be charged, and the things that have to be disclosed to us. So we're seeing those exact same problems now in subprime car loans, and that's what folks need to be aware of. We're seeing, for example, loans that are twice the amount of the value of the car. We're seeing interest rates as high as 23%. We're seeing these super long repayment periods. And there's no law that says that these fees or where the profit margin is has to be disclosed. So the folks that make you these car loans, Ashley, the more you borrow and the higher rates you agree to pay, the more they're going to earn. So there's an exact inverse relationship there.
Well, of course, what everybody wants to know now, how do we protect ourselves?
Yeah, well, you have to be smart, but fortunately there are ways. The number one thing that you can do to protect yourself is avoid these things altogether. And you can do that by having a credit score over 680. Maybe you can do it by getting a less expensive car or by saving up a bigger down payment. But the biggie here is to make sure that you understand what you're signing. Ask about those fees. Make sure you understand. They often try to sell you upgrades, so don't buy the life insurance, those types of things. Make sure you know who you're dealing with and know your options, because the biggest sales technique is making you think that there are no other options for you. Last but not least, if you end up in one of these loans and you have trouble paying it, you've got to call the lender right away, because there are no foreclosure laws to protect you. With your home, they have to go through the court and you're allowed an opportunity to appear. No such thing with a car loan. In fact, they can turn you off your ignition switch automatically, remotely now. So you don't want to lose your car.
No kidding. I mean, again, educate yourself and ask questions quickly if you need to.
Yeah. Now, they don't have to give you this information up front, but if you ask and they don't disclose it, now we're talking about fraud, so you would have some recourse.
Okay, so that is important to note that they're at some point down the road, but you don't want it to get that far.
No, and take responsibility. You know, we're seeing the same kind of fake employment information that we saw with the subprime loans, fake income. It's up to you to understand how much you can afford. Don't count on some car salesman to tell you what you can afford.
Exactly. Thank you. Such helpful information. Okay, Mike, we'll send it back to you.
All right, thanks, ladies.